again, it's like having the captain on the Titanic try to say that everything's fine when you feel the freezing cold water on your legs, and it's like, again, that other boat is there, and people have been partying there for 12 years and trying to bring you over, and every time you call your buddy on the other boat, he's like, the water, it's great, man, we've got a jacuzzi on this boat, and that's what's been happening. And it's like, how long can someone stay on the Titanic? That's a great question.
What's going on, my fellow Bitcoiners? I'm John Chanot, and welcome to the Bitcoin Path. And this is a show where we have deeper conversations about Bitcoin and self-sovereignty, about how this new magic internet money is changing the world and changing ourselves at the same time. And in this episode, I'm really excited to sit down with Blake. He and I met at BitBlock Boom. We had an amazing conversation out there and came down to hang out, and we decided to record a pod. So Blake, welcome to the show, man.
Thanks, Sean. Thanks for having me on, man. It's exciting to do another podcast, another day in the Bitcoin world.
Hell yeah.
Yeah.
Can you just provide a little bit of an intro of yourself? And
Great question. So, I work in tech. I've been in Bitcoin for about 4 years now. Obviously a big fan of Bitcoin and what it can do to change the world. I've written a few articles, one mainly on just kind of the risk-reward profile of Bitcoin and how inflation's impacting that. So, trying to measure that in a couple different ways. And I think it's really interesting to measure inflation as the increase in value of gold, and then of another asset, obviously like Bitcoin. So, that's a little bit of my background and what I'm passionate about. I think that's something that I'm trying to convey to the rest of the world and the rest of the market.
Right.
Yeah.
So, how did you, just as a brief kind of like intro personally, like what is it about Bitcoin that drew you to it originally?
Yeah, great question. I had a really big passion or understanding for kind of the Federal Reserve, not passion for the Federal Reserve, but understanding sound money and kind of what's going on there. I was a real estate finance guy, or that's what I always wanted to get into since I was young, wanted to get into real estate development. And so I was always studying those markets when I was like maybe even 14, reading books on this type of stuff and understanding why things were happening or how to make a good deal, good project. One of the big aspects was the interest rates, and then so you start to go down the interest rate question, like what are interest rates, how did the Federal Reserve set them or influence them, and then that kind of gets you into the question of what is this Federal Reserve, how are they manipulating or setting interest rates, and then that gets you into the sound money aspect. You get into like, well, why can they print money and give it to their friends versus when an average person does that, like George Floyd, you're arrested and it's fraud and all those type of things. So that got me a really good I had a really good understanding of just kind of that concept, and knew that was a problem. I had to stop paying attention because it was so frustrating, where it just doesn't lead to it's an overarching like kind of depression isn't the right word, but you just feel like a helplessness is there. So I had to stop doing that for a while. And then when I got Bitcoin, like totally understood it. It wasn't long before I kind of, someone gave me my first Bitcoin, not a full one, obviously. And then I, just, it clicked for me because I understood the problem, realized that this was a potential solution, and realized how bad the problem was. So therefore, any potential solution, it seems like just a lot better in comparison, obviously. So that's kind of a little bit of my background and how I got into Bitcoin, or was ready to understand Bitcoin when it came across the desk, so to speak.
Hell yeah. Yeah. I think that's key, because how many, like, something that I've run into all of the time is talking to people and just asking like if they have even thought about money, like what money is, and whether like, so we use the US dollar as money, and it's just assumed that that's money, and I'm working, I'm doing all this shit to accumulate
Yeah.
this thing, and like it just baffles me like how many people don't even stop to question, to think like what is the US dollar, and then like how's it created, how is it
Right.
what makes it valuable, things like that.
It is interesting because, being orange pilled around in the Bitcoin world and studying it, you have to study what money is, and you have to ask all those questions. Why is this money better than this money? What makes Bitcoin the soundest money? Why is it inevitable potentially that it's going to win, or a high probability that it's going to win? But then I try to give most people, that credit or, I guess compassion,
Yeah.
because I look at, Warren Buffett and Ray Dalio and these hedge fund managers and all these people that their full-time job, and they have teams to figure out how to make money. That's their full-time job, is to make money for their clients. And they don't even know what money is. I mean, they're not even close to understanding what money is either,
Right.
which is
Right.
baffling to me, because that's their full-time job, is
They're
to,
the like richest people in the world, basically.
and their full-time attention is to get more money.
Right.
And so the
Right.
thing that they're trying to get, they don't even know what it is.
Yeah.
And the
Or
irony of that is interesting, and I feel like there's got to be some kind of psychological understanding of, a logical fallacy, and why human beings might not kind of wake up to what that is. If it's not discussed that often, it might just not be up for conversation. And I think there's an aspect to that, because when you start to study or try to understand what inflation is and how much money printing is going on and how you're defining it, there's not a lot of great books on it, and there's not a lot of great equations in it. And it's not overly complicated, but it also, inflation is something that impacts some of the biggest, almost all the markets in the world, and some of the biggest markets being the bond market, the real estate market, and things like that. So it's very surprising that it's not in a conversation, because maybe we'll go over this later on, but just getting into like the equations of the math and how to make a good business investment in any, again, real estate or bond market or even equities. An aspect of that is understanding the cost of capital, what your interest rates are, as well as what inflation is. But
Right.
not many people really try to understand what the inflation number is. And it's
Can you break down like why that's the case? Like, for instance, what comes to mind for me as a simple explanation is like, if you're setting up a business, you're creating a business to make money,
Right.
to be profitable.
Right.
You have a certain amount of expenses,
Right.
and you want to have a certain amount of income, and you want the income to be greater than the expenses,
Yeah.
and that like profit margin you want to be maybe like 20%, 30%, depending on like how big your operation is. And so if inflation is at, what they say, 5%,
Yeah.
inflation meaning the growth of the monetary supply, or like
Yeah.
increase in prices. There's a number of ways, I guess, to attack the definition of inflation, but like
Right.
if your currency, if the money you're using to denominate your business and your profitability is devaluing at like 5%, then at least you have a 15% margin
Right.
on the inflation profit right? Is that kind of, am I getting at a similar thing?
You're getting at it, but I think a simpler concept is just real estate, because everyone can kind of understand it.
Okay.
And I think first we probably have to define terms, because a lot of people in economics tend to define inflation as the increase in prices versus the increase in the money supply. And those are two
Right.
totally different things. I mean, you
Right.
can look at deflation of electronic goods and digital goods, and those prices are coming down. I shouldn't use deflation, actually. The prices are coming down. And then things like real estate, healthcare, education are going through the roof, things that are not influenced by technology. And so when we say inflation, what we really mean, and how it's correctly defined from my understanding, is that it's the increase in the money supply. So anytime the Federal Reserve prints money, but then there's an additive thing where banks can lend out money, and that's a creation money process as well. So you have the Federal Reserve or the central banks. November 1st right now, I've created $31 trillion in kind of base money. And then the banks can lend on top of that. So right now there's a lot of banks lending. So they create money and they create a loan out of thin air and they give you $1 million to invest in real estate or to buy a home.
Yeah.
That's all printed out of thin air. They don't actually.
Yeah, it's literally an entry in a database.
Right. So now that we've defined the terms, like what inflation is, with that equation is so important because let's say that you had $100,000 loan to buy a $100,000 property, and inflation is 10%. And we can get into showing how that's the case, and there's ways to triangulate it, but for this thought process, it's 10%, and interest rate to get a loan on that $100,000 property is 2%. Well, you subtract the inflation from your cost of capital to interest, and you realize that the cost of the loan to pay back in real purchasing power over time is decreasing by 8%. So even if the value of the real estate that you bought doesn't go up by anything, the fact that you're paying off a loan that's decreasing in real dollars or real value means that is going to be a really good purchase. If you're just using inflation to realize that the debt is being inflated away at 10% a year, and again you subtract your interest from inflation and you get 8%, so you're getting 8% on that debt and paying that off. So even if you just took that money and didn't even put it into the house, you just put it in $100,000, right, and you just let it sit into something that can hold its value, you're going to pay that debt back in less of an asset. So you want to take that debt and put it into the hardest asset you can find. So I think that's a very simple equation, and that's why you see housing prices increase. And then you throw into the factor of housing prices have been increasing on average over the pandemic, I guess 20% in some markets, but let's just say it was 2%. Now you're talking about the 2% value increase on your house is covering your interest rate, your interest payment to the bank. And I think most people can be confident that their housing prices are going to increase by more than 2 or 3% on average over the next 10 years.
Yeah.
And so that's where that equation isn't used to understand the debt, because inflation isn't calculated in that valuation of that real estate or that loan, business case. So once people start to do that, I think it makes a lot more sense to to invest in real estate, because again the debt is going to be worth less in the future.
Right.
So I think that equation is huge and can be applied to businesses, the bond market, real estate, and of course things like Bitcoin. So once people start to get that makes, and it's free money. I mean, it's 2%. That might be interest rate, but the fact that a bank is willing to give you $100,000, it's $100,000 that you didn't have before, that now you're putting to work into an asset that's growing and going to be inflation. And so you're taking something that you didn't have, you're filling out some paperwork, the bank is creating money out of thin air, they're giving it to you, you're buying a hard asset, and you're sitting on it waiting for inflation to allow you to pay back that loan at a more cost-effective or lower purchasing power in the future, so it's easier to pay off that loan in the future. So I think that's what people are naturally doing. They just don't know, and they haven't run the numbers to have those assumptions in there. They say things like real estate prices never go down, and so kind of technically they don't. But if you measure it in a unit of account of fiat currencies, then they don't. But if you measure it in things like gold or Bitcoin, they're going down. And other markets have gone down. I think China's seeing that right now with the Evergrande thing, as well as a few of their other developers. And then Japan had a huge kind of property meltdown in the 80s, and they have never really recovered from that. Right. So it is how you denominate the unit of account to measure, if real estate prices are going up.
Yeah. Wasn't there was some chart that I saw somewhere that was measuring equities, denominating like equities in Bitcoin
Yeah.
or something, and or maybe it was
Probably gold.
in
too.
gold,
Yeah.
in gold and Bitcoin, but in gold they basically uh, plummeted,
Right.
and
And gold used to be money. That's the funny
right.
thing about this whole. That's why that inflation number, if you're measuring inflation using gold as that indicator, you're at an 8% inflation rate. And so gold
Mm-hmm.
used to be money, and the idea with the paper was that you could redeem it at your bank, get $1 of gold or weighted gold,
Mm-hmm.
or like in England, you get a silver pound with your certificate. But
Mm-hmm.
obviously, we went off that in 1971. So since 1971, gold has been appreciating on average by 8% a year. And so that's a good lower bound for inflation. And you can argue, make very easy arguments that inflation will continue to accelerate. It's a compounding growth curve. So
Right.
it continues to grow. It doesn't grow linear, it's an exponential. So some might argue that we're kind of at the beginning of that exponential right now. And it kind of feels like that. I mean, just with everything, the government's
Yeah.
continuing to print more and more money. They don't seem to be slowing down or apologizing. They almost seem to be looking for more excuses. So,
Yeah.
you almost feel confident based on that investment kind of thesis I was talking about before. You're really not even buying the real estate. You're just buying the loan and knowing that it's going to be devalued in the future. And then you're putting into something that'll store and hold that value.
Right.
And then you're talking about your opportunity cost. Is it Bitcoin? Is it real estate? Is it bonds?
Right.
Is it gold?
Right.
So
Right.
yeah. And I've talked a lot there, but that's kind of the way I think through it.
Yeah. Yeah.
Yeah.
So, I guess, the question is just to kind of like simplify this, like you have the opportunity to get free money. What are you going to put it in?
Right.
And so this is a fucking Bitcoin podcast, so it's it's pretty obvious like where we're going to go with this, but like as a entrepreneur, as an investor, or as just a person looking to like put your money and time, which is the fruit of your time and,
Right.
and energy, into something. But in this case, it's just like fake, fake like numbers on a bank's balance sheet. Like,
Right.
where are you gonna put that? Like, how have you kind of landed on Bitcoin? What is it about Bitcoin that is making it the most value, that to you makes it the biggest upside potential, that gives it makes it the most hard asset?
Well, the asymmetric, I mean, talking about it as an asset, or like let's look at it through the investment lens, and then we can back into so like why it's a good asset, the fixed supply, unconfiscatable, things like that. But the store of value market is arguably $900 trillion market. So, or even more, depending on how you want to do the math. But on the low end, I think that it's simple that, Bitcoin, if Bitcoin is the best money on the planet, perfectly engineered money, then it will replace all fiat currencies and all fiat currency derivatives, or the bonds, or debt based on them.
Okay, so can you break that $900 trillion
Yeah.
number a little bit? Like, so what is that? That's basically including all real estate.
It's almost all, I believe, all debt. I got the number from Greg Foss. I forgot how I backed into it. But he believes that it's the 900 trillion in debt is really what it
Okay.
comes down to.
Okay.
So the bond market, all debt, and that's kind of where he's getting that number. And so, yeah, that's kind of more on the high end.
It's a fairly big number.
It's a huge, absolutely ginormous number, which is like we're trying to figure out at what probability. There's a bell curve of, it's Bitcoin's guaranteed or likely to do this number, and then in the middle area it might be 900 trillion, and then there's also 1.6 quadrillion dollars in derivatives of these like banks pushing money back and forth with each other. So there's also that, which is like more of like 100 trillion or 100 million dollars a coin, north of 100 million dollars a coin. But breaking it down, I think simply you've got the low end, which is Bitcoin could replace all currencies. So everything that you think about, money in your bank, savings, pieces of paper that you pay, and then M2 money supply. And there's about 100 trillion of that if you include gold. And then there's about $250 trillion of bonds, which is a derivative of fiat currencies. In other words, you can think of a bond as to be money at some point in the future. So if it's a 2-year bond, in 2 years, you'll have that amount in a bond, and it'll be cash. So in a lot of ways, it's a fiat currency derivative. In other words, that it's based on fiat currencies. And so if the fiat currencies were to hyperinflate away, those bonds would be to go away as well. And that value would have to find somewhere else to go. And there's an obvious use case that it would be Bitcoin. And so that you're talking about a $350 trillion low-end market for Bitcoin because it's just replacing an inferior engineered money. And so then,
to put that in context, just right now, Bitcoin is at about a $1 trillion market cap.
Right, 1 trillion, right.
Yeah.
So the other thing with that too, not to make this overly complicated, but there's only about, I think, 400 billion that's gone into Bitcoin of actual dollars. So every time you put money into Bitcoin, it's okay. Well, we're going to table this.
No, I was just
every dollar that you put in increases it by more than $1 because just because everything's made on the margin. So what's buying and selling and trading right now, the Bitcoins that are on the market today make the price. But if old school Bitcoiners aren't selling and they bought it for $1, they didn't put in $63,000 or $70,000 per coin 10 years ago. They put in $1 for a coin, or whatever the number was, $100 for the coin. So the point is that even with that $350 trillion coming in, it's going to increase it by 500 trillion, 600 trillion, at least in the short term. So it'll be very volatile.
Yeah.
But to get off that kind of quick point, so that's the low end of Bitcoin's valuation of the total addressable market, and then you get into the high end, because then you start to understand. Once you really start to understand money, you start to understand that people are trying to get out of the currencies that they have to get into harder assets. And so if currencies weren't inflating away at any percentage, then people could put $1 million into their bank account and live off of it. But nobody wants to put $1 million into the bank account and not put it into any investments, because they know that their fiat currencies are inflating away, so they want to do something with it. They want to put it in real estate. They want to put it in Bitcoin. They want to put it in gold. They want to put it in the stock market. Anything to keep it out of the bank account, because the bank account is not doing anything for you. Keeping it in cash is not doing anything for you.
Right.
So there's an argument that there's a lot of money being stored in the money attributes are being stored in things like real estate, things like fine art, bonds, obviously, and then Bitcoin and gold as well. So then you just, based on that assumption, then you just increase it by 10-20% or whatever. But then you're also just trying to take Greg Foss's $900 trillion as maybe the middle baseline of what Bitcoin could be worth. Its total addressable market is 900 trillion. I don't know if I said billion or trillion. Then you start to do the math on that and the probabilities of it being that number and having that type of net worth.
Yeah.
I know I've said a lot, so I get...
Yeah, no, that... I mean, that... I was just kind of... The reason I was reacting that way was because it was just starting to make sense to me. I was like, oh yeah, like, just because it's $1 trillion market cap right now, that doesn't mean that $1 trillion has actually gone into Bitcoin.
Right. Up
until this point. It's just, that's the standing value of the existing supply, right?
Right. That's if you multiply $63,000 worth of the prices right now times the 21, you get that market cap.
Right.
Yeah.
Okay.
But yeah, obviously coins are lost, and some of them didn't have any, real value, no one paid for them. They mined it, which they paid for it, but they didn't actually exchange $1 for it. They were exchanging electricity for it. So it just shows that it can get very volatile on the upside very quickly when the rest of this $900 trillion wakes up. And there's $20 trillion right now of negative interest rate bonds. So in other words, someone's paying, you're paying me $100 and I might give you $98 in 2 years, and that doesn't sound like a great deal, obviously.
Right.
So those trillions of dollars of bonds are going to hopefully wake up, soon, and go like, how are they not paying attention to something that's growing, has a 200% return annually, a year, and is growing at an exponential rate.
Yeah.
I don't know how long someone can keep their head in the sand on that. That's paid to keep their head above the sand,
Right.
From a hedge fund perspective.
Right.
Yeah.
So what are the primary hurdles? What's standing in the way of them? Say these, because I imagine the bondholders are like pension funds, like family offices. What makes up? Who are the people who are actually controlling a lot of this wealth?
Yeah, that's a great
Do you have
question.
an idea?
I mean, I don't have a breakdown, but a lot of pensions, sovereign wealth. I mean, it's everybody. Literally, countries to individuals to pensions to hedge fund managers. How much are invested in the bond market? I mean, Russia and China used to own a ton of U.S. denominated bonds, and now they've sold them all. Mostly they're not buying anymore, so they're letting them. They're not really supporting that market anymore. So it's just about everybody. Yeah.
So the question then to me is how are these people? How are they going to buy Bitcoin, and who's going to sell it to them? Because that's something that I always kind of go back to. I know people have talked about like Saylor, for instance, is suggesting in his imaginative future there would be a dollar that's basically backed by Bitcoin, or you have Bitcoin as a reserve asset, and you can print fiat as I'm probably butchering what Saylor actually says.
I mean, it's kind of confusing what his idea where those two systems can coexist. So I don't fully understand it either. I mean, it's like, oh well, there's still going to be fiat currencies, and there's also going to be, it's like saying everyone's going to be using a fax machine and the internet, and it's like you're either going to kind of do one or the other, and there's a network effect. So I don't know why
I like what Brian Harrington. Shout out to Brian Harrington when he says he had a Good Morning episode the other week. Do you know who Brian Harrington is? He runs a lot of the Bitcoin meetups in the SoCal area. The Southwest Bitcoin Network. Shout out to you guys. But he had a quick 30 second episode where he's just like, if Bitcoin is moving around and doing those things, it doesn't make sense that on the same timeline, fiat money is moving around in the same way. If Bitcoin can move around on the Lightning Network and do all the things that money can do, then why do we need to use fiat?
I think Michael Saylor is just being a nice guy. He doesn't want to go and gun blazing the way that we all do, and he kind of already is. Where instead of just feeling like your fiat currencies are going to be gone, he just kind of comes in like, they can both coexist, and it's just like that's the first parallel to get people in, versus trying to displace their mental models immediately, where it's like these will coexist. Can you see a use case for Bitcoin and Lightning and all those type of things? Versus we're going to seek and destroy your fiat currency. It's just not going to survive, and your whole models and everything that you're investing in right now is going to be turned on its head. People just can't accept that quickly. So I think he's going in, and ultimately selling it and just opening up the ideas where people can kind of understand that. I think they're at the place where they know that they need to invest a portion of their investments in it, and I think once they're really coming up to the fact that they don't have a choice anymore, they have to have an answer to if they're going to invest in Bitcoin and at what percentage. It's not a question of if, but how much. And that forces them to do the work. And you asked earlier what's preventing them. Nothing's preventing them. Like, that's the crazy part, is like it's just an educational function of people understanding it. And this is the math that I use to understand how early we are. It's I subtract Saifuddin the Moose's Twitter account, the number of followers that follow him, subtract that by the population of the world, and that's how many people understand Bitcoin. And that's that's really like that's how I factor in.
Yeah.
It's like there's someone that's very close to that, and I think that's a simple model, because if you haven't read or don't understand Austrian economics and read those type of economics books, and you're not following him, you're not like committed. And some of maybe the other people like Michael Saylor, but you know, once you understand monetary science and history, you understand that there's 5,000 years of use cases of the strongest money winning, and you just need to understand what the top 10 qualities of the money are, and in what ratios and why, and then you'll understand that Bitcoin is like a flying car that runs on water. You know what I mean? Clean energy, everything. But people don't see Bitcoin as that, because they don't know what money is. So therefore, they think like Ethereum is also a money, and like the Venezuelan bolivar is also great money. You know, it's just like they're all treated equally, and compared to the fact that like one's 1,000 times better than the others. So yeah, I think it's just a function of education, and then in larger organizations, it just takes more and more time. You know, because you have to convince the old guard and all other logical fallacies, and take the career risk to you know. To convince them. And there's a lot of that in the tech world, where the tech people would leave companies to go start their own startups because they couldn't convince the internal organization, you know, to adopt the internet, right? You know, there was a lot of those type of conversations happening when the internet was coming around, and so they just left and started their own tech companies. And it's the same thing here, but the challenging part is that, you know, money is everything. So, you know, you have to leave your current organization and mindset to come into Bitcoin, if that makes sense. So it's just such a big market that, you know, it involves everything.
Yeah.
You know?
Yeah. I mean, it's like the lifeblood of our entire civilization, the monetary system. And I go so far, I take it a little further and say, I think, money is the most spiritual part of any civilization, because it is that informational, base layer informational protocol that like communicates value throughout the society, and individual decisions of value are basically our spiritual walk. Like that's where we're making. That's where our will, like our hearts and our like soul, is being expressed into the world. So that's kind of like for another another discussion, but like when that's why, like, when that money is fucked up, when it's manipulated, it's so you know, you see the effects everywhere. And you know, as Bitcoiners, we talk about that all the time. Just all the clown world that's happening, the lack of signal in the news, in like actual product making, and like engineered obsolescence, and all this, like just fiat, you know, the fiat world. We see it all around us. So I guess, so I think we've done like a really good job of just kind of laying the land, like from an investment thesis of like, all right, you consider yourself an investor, an allocator of capital. Like, why the fuck aren't you buying shit? Like, why aren't you buying Bitcoin? It doesn't make any sense why you're not buying Bitcoin.
Yeah.
And I understand Saylor's like approach to that, like that's, he's in his lane of speaking to these types of people, where he has to be like, yeah, fiat money and Bitcoin, they can both kind of like go together. And but I'm kind of like really focused on the layman, on like blue collar people, on workers, on like just regular people. And I enjoy having the freedom to just say it how it is, right? So I don't really see. I see this as more of like a crisis and a potential, like a like that we're on the verge of a major transition, and I want to try to like evangelize as much as possible to get people
Right.
in the boat,
Right.
so we
Before
can
it
so we
starts
can all
sinking.
survive.
Yeah,
Yeah.
yeah. And then not only that, you've got this boat where the Titanic's sinking, and you're trying to get everyone into a life raft, and you're trying to stop the
Right.
musicians from playing in the ballroom, and you're like, go downstairs and look at the fucking hole that's in the
Yeah.
boat, and no
Right.
one's like you're crazy, like stop being such a party pooper. You're like, there's a hole in the boat, like I'm
Yeah.
getting like, come on, please, like, and
Yeah.
it's such an
Like,
obvious.
you don't have to look far.
You don't have to look far. Go down the
Just go
stairs,
downstairs,
read a
yeah.
book, and you'll be there pretty quickly. And
Right.
then look around.
Right.
This is the funny thing with this is it's history, and so if you study history, it's all the patterns are right there. These currencies have failed thousands of times before, hundreds if not thousands of times before throughout history, throughout 5,000 years of monetary history.
Mm-hmm.
And so there's a million use cases that you can understand why this is going to happen.
Mm-hmm.
And so it's not going to be surprising that it's going to happen. Just like every time you put a gigantic hole in a boat, it tends to sink. It's the same thing
Yeah.
with currencies. Once
Yeah.
the hole in the boat is the inflation number, is the money printing. And so the bigger the hole, the faster it happens, the more people realize that it's happening. And I think that's why I want to convey this, because people think that it's an option. Bitcoin is most likely going to win, and so if you're risk averse, having your money in fiat currency or any contracts denominated in that,
Mm-hmm.
you are at risk. Your retirement's at risk, your pension's at risk. I have a friend that's in the military and he wants to retire in the military, and he's going to focus on that pension and or whatever you would call that. I think it's a pension. They get their pay, I think like 50% pay or maybe even 100% pay
Like for the rest of
for the
his
rest
life.
of their life.
Right.
But if that money's worth nothing, guess what? You get nothing.
Yeah.
And if you're depending on that, you're going to have nothing to retire off of. And so that's the crazy risk part, is that like people aren't assessing the risk of their system failing. They're just being like, Bitcoin's new and it's volatile, therefore it's risky. Volatility does not equal risk. There's a huge difference between risk and volatility. In fact, there's almost like no commonality. It's just like people assessing an asset, and that makes it volatile, versus the risk of the system breaking. So Bitcoin is not going to break. It can survive a nuclear war. So there's no risk in Bitcoin, but people don't know what a Bitcoin is worth. Is it worth $100 million a coin? Is it worth $1 million a coin? And so you're seeing people like Michael Saylor come in and throw billions at it because they realize what it could be, and that makes it more volatile, right? When he decides to dump 6 point whatever billion dollars into Bitcoin, it's going to go up real quick, and it's going to be volatile, and then it's going to drop down a little bit when China sells their Bitcoin for mining. So I think the real thing is like, I just implore people to take that risk assessment and look at it through the risk lens, because Bitcoin is the safest investment. It's also the safest way to hold your property. And if it is, that means that the other thing that you're holding, if you're holding your contracts, your pensions, your retirements, denominated in fiat currencies, and they're going to be worthless in the future, it's like, what's more risky? And so we already know that, let's say we're talking about an 8% inflation based on the gold kind of, low end inflation number. Let's just say 10% to round up a little bit. Even with people's contracts, the retirement contracts being denominated, in fiat currencies, just a 10% inflation is going to make sure that you can't retire off that. You're not going to be able to afford your retirement by the time you have 4 or 5 years of 10% inflation, let alone 25 years of 10% inflation. So they're not going to be able to afford rent. They're not going to be able to afford groceries. They're not going to be able to afford meat. And then you have this thing that is also going to allow people to get off the fiat currencies and onto the new better system. And the more people get off of the old system and into the new system, the more that inflation is going to be felt and impacted, because as the governments are printing trillions of dollars, when you have a whole entire, let's say the United States, 350 million people that are being their money's being inflated away, but let's say half of those people left to come to Bitcoin, then the inflation number is going to be even more impactful for the remainder of those 150 million people. So it's going to double their inflation just by the fact that half of the people already left. And so you have two compounding factors. One is their money printing at 10% a year, and now you have another factor where everyone is deciding to leave that old shitty system and go to the new better system. And every day, people are making decisions to move to the better system. You don't see people that have put 1,000 hours or 10,000 hours into understanding economics, Bitcoin, monetary systems, go, you know what would be really great? They're sitting down doing podcasts like we're doing and saying, like, you really need to get into the fiat currencies. You really need to get into the U.S. dollar right now because this Bitcoin thing is super scary. I've done 10,000 hours of research. I've read this book. I've been on Twitter. I've had these dialogues. And they go, it's a Ponzi.
There are plenty of shitcoiners doing that same exact thing.
That's true. That is true. That's true. So yeah, it's tough. Yeah.
Buyer beware.
Yeah, exactly. There are some shitcoins out there. So that does make it a little bit more difficult, and they are, recommending that. But compared to the U.S.,
they're killing it on marketing too.
Yeah.
Sorry to interrupt.
No, it's okay. Just, we could go down that tangent. We just start getting angry, but or disappointed.
Steer it away.
But I think that's the framework that hopefully a lot of people can take into this, because you take the probability of the outcome that you're thinking about times the total addressable market of 900 trillion. So you do the math on what 900 trillion divided by 21 million, and let's say that's $20 million a coin. What's the probability of Bitcoin becoming worth $20 million a coin, right? Mm-hmm. And you can, as you do more research, you usually start to realize that the probability, that number increases, and sometimes, or a lot of the times, the total addressable market increases as well. Mm-hmm. So if there's a 50% chance that you can buy something for $60,000 and it's going to go to $20 million a coin, you want to take that bet, right?
Yeah.
And then if it's 70%, you definitely want to take that bet. If it's 90%, you definitely want to take that bet. And then it's really just a portfolio allocation question based on what's the probability of this thing getting to $21 million or $20 million a coin by X amount of date.
Yeah.
And so what I don't think people can do anymore is say that there's a 0% chance of it, becoming the world reserve currency. It's like, there's a chance. We all know that there's a chance. What do you think the chance is, and why? And what do you think the risks are? And then people start to say, well, there's a 10% chance. And you're like, well, how's it going to be stopped? The government's going to stop it. Well, that doesn't seem to be and those very basic, uneducated, unresearched, perspectives start to fall by the wayside. And then
all the mining's in China, though. Oh no. There's no more mining in China.
And who cares if it is anyway? It's like saying, it's like saying that there's gold in China or something. And it does matter, but not to the extent that you shouldn't have your money in the system. Again, it's like, does that mean that the system will stop working? Does that mean it will not continue on at 200% returns if China has 50% of the hashing power? No, that doesn't mean anything, or almost anything. And again, fine, if you believe that they have 50% and they can destroy the network in some way, what's the probability? Maybe take the probability from 50% down to 25%, and you're still going to put money into this asset. It's just about how much money, especially when you consider you have to flip that probability on its head. So now you're saying there's a 25% chance that Bitcoin's going to win. There's also a 25% chance that fiat currencies are going to go to zero.
Yeah.
And so you've got your whole net wealth and future income based on a currency that's going to become worth nothing. So if you are in, let's say, the military or in a pension system where you are going to get paid out, let's say $100,000 a year for the next 25 years, there's a 25% chance that is going to become worth nothing. And you also have to apply that type of probability, because it's a winner-take-all, to the other system. And so I think that is going to it is much more motivating for people to realize that, because they're looking at their pension systems and they're looking at their future cash flows of these contracts that they've signed, these careers that they've signed up for, and they're going, that might not be worth much in the future, and that's scary. And I think the crazy thing about Bitcoiners is they move into Bitcoin because they are scared of the current system. They're very risk-averse people having fiat currencies or currencies that are denominated by pieces of paper by governments wasn't safe enough for them. So they
Right.
found something safer. And so they were the risk averse people that just kept searching for something better. And when they found it, they're like, this makes a lot of sense. But people have a recency bias, which means that because the dollar has been stable and they've been using it for the last 100 years, means they think it'll be stable and usable for the next 100 years.
Yeah.
And that idea is it's laughable actually. I mean, it's
Yeah.
not even close to a probability. Like there's a 1% chance that you might be using the dollar
Yeah.
in 100 years from now, and $1 million can buy you a piece of real estate. It's going to be buying you a cup of coffee if it's still around.
Yeah.
And so
Yeah.
that's the
I
crazy
mean, talk
thing.
about
Yeah,
volatility, like the price of a steak, like having what kind of volatility do you want? Like the volatility where using the dollar, denominating the dollar, price of steak was $5, or like at the supermarket, maybe it was $10 last year. Now it's like $20.
Yeah.
It's just like, holy shit. And yeah, there are supply line issues. There are a lot of different factors going into that, but I'd say like even the result of all of these supply line issues even could probably be deduced back to like the fiat monetary supply, like them being able to actually manipulate and decide like who's able to have businesses and run these types of operations. It's just fucked with the entire market.
It totally has, and just the money printing alone can mess with the market. But then you could also think about the man behind the curtain. Let's say these big central banks that are like, how would they want to distract people from inflation, because they just can't say like, if they don't have a supply chain issue, then everyone's like, oh, then it is the money printing. But if they have a supply chain issue, then it can distract from
Right.
a more complicated, more obvious, more probable solution, which is like that they printed
Yeah.
$31 trillion and it fucked up the economy. Like,
Yeah.
that's a lot more likely than like, COVID. I don't know how many people have died from COVID versus heart attacks as an example. Like, there are way more people dying every day of a heart attack than there is people dying from COVID. So that's not impacting our supply chains. That's not destroying our businesses. We're not going out there proactively stopping that. And how you feel about COVID or whatever, but like there's direct, overreach with the supply chains where they're shutting down those ports because of COVID. I think there was one COVID case in China in one port, and they shut down the whole thing. Does that sound like, I wouldn't even stop a party for a COVID. I've been to events where I didn't know there was COVID, but at the point where I'm like, okay, I'm over this COVID thing. Let alone like if I had to keep a dock open and keep the economy flowing to keep our ports open. So it just doesn't make sense from that kind of financial self-incentive, perspective. And it makes a ton of sense that if you were in charge of this $31 trillion and printing it, that you'd want the people to believe that it was a supply chain issue rather than the $31 trillion of money that you just printed out.
100%.
And so if you're sitting on that side of the chair, you're like, well, can we distract them in some way? And you can, and it's not a absolute. It's not all supply chain. It's just all money printing. It's going to be a factor of both those things. But I would say that it's 90% the $31 trillion being printed and 10% supply chain issues.
Yeah. Yeah.
Um,
So I want to change gears a little bit and go from thinking about Bitcoin from the investment perspective to kind of asking the question. I've had a couple friends reach out to me and express a little bit of concern about Bitcoin, basically saying like, what's the difference? Like, is this just about getting wealthy and making a shit ton of money? And if that's the case, then I'm not really interested, because I have like, I'm well off. Like, I'm more interested in like human development and improvement and like spiritual development and stuff. So like, what is it about Bitcoin to you that differentiates that is like leading us to a different type of like wealth or a different type of success. Does that make sense?
Yeah, totally. I think there's the moral argument or the moral case for Bitcoin, which is even stronger than the investment case. But I like to start off with the investment thesis and the risk reward profile and
Yeah.
a framework for people to
Yeah.
get into it.
For sure, it has to make sense that way.
Because the first step is to get out of the current system and get into the new system. And then you can decide what you want to do in terms of those other things. But first put the life jacket on yourself, get into the lifeboat and get, to safety before you start talking about transforming human society, right? And it's kind of that thing.
Yeah.
It's just like, yeah, let's just talk about, keeping ourselves alive and those. So I think that's the first step. And that's what these podcasts are about for most Bitcoiners is getting the new people in before the banksters and before the Russian oligarchs get in and take their trillions of dollars or billions of dollars and start buying Bitcoin. If your mom and pop that are depending on those pensions can get off the Titanic and get into a lifeboat and then you all can decide what you're going to do with that money, and it is going to be a land grab. The sooner that people wake up to this, the more sense it's going to make. So first, you have to understand that it's kind of an absolute thing. You're either on the Titanic or you're off the Titanic, and you can't be both. And the sooner you get off the Titanic, the better off you're going to be, and the more you can transform yourself in society. And so that's from an individual perspective, but then there's also a societal perspective where now you can create community because you're not on the Titanic. You can think about raising your children and creating the systems in place to do that. And so there is the natural monetary system that is not stealing wealth from people. So I always like to think of Bitcoin and simplify it as you've got one monopoly board where governments are printing $31 trillion a year and giving it to their banker friends. And you've got this other monopoly board just across the street or in the other room, whatever you want to say, that is a fair monopoly board game that was just created 12 years ago, that no one kind of controls it, and the rules are there for everyone to see. And in the other game, you can't see the rules. You're kind of electing politicians, but they're screwing you, and they're giving the money to their banker friends, who are in turn giving it to their friends and their business friends, and all these side hustles and stealing it from grandma, the pensions, and the poor. And so, once you stop, at the very least, stop those guys from stealing from grandma, the poor, and the young, you're going to be a lot better off. And now we can, talk about how to distribute and how to build a better society, which I don't think there's many Bitcoiners that don't think about that question. I mean, you look at, I think Max Kaiser to me is a great example. Early on in Bitcoin, still has his television show, still trying to convince people, still goes to the conferences. He dresses like a rock star. He does the multi-millions of dollars that he must have. He doesn't give a shit. He wants to change the world, and there isn't a moment of hesitation with him or virtue signaling where he's trying to say oh look, I bought I donated to so and so. No, he's going to be there getting people off the Titanic and on to a safe boat. And the Titanic analogy is interesting because it's we're not even getting off the Titanic and into a lifeboat. We're getting off the Titanic into a yacht, a party yacht that has free champagne and everyone's having a good time, and they're all inviting you over. Come on, man, just get off the boat. It's really fun over here. And so, with heaters and everything that you'd want, and so that's kind of even more an apt analogy. And Max Kaiser is the captain of that ship, and he's the party planner on that ship. So I think that's the first step to get people into that, and I think that's a great thing to think about. But then they have to also understand why money will allow those things to happen. They have to understand economics, monetary systems, because things tend to get worse when there's more inflation. And you can see that in hyperinflated countries, where Ecuador, Venezuela, Zimbabwe, Argentina, Brazil, they've all gone through hyperinflation. And most Americans and Westerners can't put themselves through that process. But if you've ever forgot a credit card and you didn't have any cash on you, imagine that for 5 months, and you have to go in and trade your furniture for a steak or furniture for a burrito. It's just the economy just shuts down. You can't go on Amazon and send your, whatever supplies that you have in your house for whatever you're trying to buy on Amazon. The whole system breaks down. And so when you start to realize that, fix the money first, then that's allowing the base layer of concrete to be poured so you can build all those other systems on top of it, and you can think about the future. And that's relatively obvious. If you've got $10 million and currencies are inflating at 10 to 20% a year, you don't even have enough money to retire. If you're keeping it in the bank and you're keeping it for fiat currencies. So even if you're a millionaire, you're stressed out about how you're going to retire. And so with Bitcoin, it's the exact opposite of that. The earlier you get in, you're going to have a fixed supply. It's going to be worth X amount in purchasing power, and you can be confident that it's going to increase over time. At what percentage, that's arguable. Or we can get into 10%, 20%, 30%, 200% is the average that it's been appreciating. And now you can plan for the future. You can think about where you want to build your house and what kind of community you want to build versus getting another $10 million to make up for the $10 million that's being hyperinflated or being inflated away.
Right.
And so, I think hopefully that provides a framework to help people understand why the money is so important. And once you fix that, it'll allow people to each individually think for the long term and try to help each other, versus trying to put on Band-Aids on the homeless issue or education. This will allow that'll solve for a lot of it, and we can get into that. But once you start to understand the moral arguments for sound money and therefore Bitcoin, it becomes obvious that should be your first imperative as well, just to make sure the system survives, which it will. It doesn't need anyone's help. But then you can put your money into it, get out of the shitty system, put your money into a better system. It will grow, and now you can build a community, build a school, build whatever you want to do, whatever your priorities are. And so that's the first step, is to get off the Titanic. And I think, I guess that'd be my response to that friend of yours. It's like, I would care more about helping the world.
Yeah, for sure. Right. And it was, it's a little bit, it's frustrating in some ways because, Bitcoiners were very focused on the money. And since we're talking so much about, fix the money, a lot of people think in their minds, they're kind of averse to talking about money, and even like it's very...
It's got a negative connotation.
It has a negative connotation.
Because of fiat currencies, they had all these like hungry money type people, and you think of the bankers, and you think of this like, these Rothbard people, and they're just up there in their castles and just being evil and trying to get more money.
Right.
But what they're doing is they're printing more money and they're stealing it from the poor, and that's not good. The money, the concept of money isn't bad. It's the fact that like these banking assholes can steal
based on theft right now.
Yeah, and they're stealing it from you. And you're either on one side, you want to do something really great and you want to earn your money and you want to help people, or you can get on the banking side, central banking side, print $31 trillion, steal it from the rest of society and give it to your friends. And it's like, that's why the people right now have a negative connotation towards money, because they see those are the people with money doing those things, buying the yachts and printing the money and stealing from the poor, and they get this at a gut level, even though they might not be able to articulate it or look at the paper trail. So I think that's why people want to stay away from, I don't want to be considered money hungry or whatever, versus like it's like, I don't know, a lot of millennials, they can't even afford a home, and versus being money hungry, they can even take care of themselves, the younger generation. So it's like, first you got to be able to put on your own oxygen mask, and again, because the system is so dynamic, getting in earlier will allow you to do better things earlier. And so money is just a tool, just like anything else. Like a hammer is a tool, like a chair is a tool, or is a thing to meet a human need. Money is the same thing.
Right.
So,
I think it's fascinating. We were talking about yesterday, Burning Man. Like, I got to go this year and to the road burn, and I know you've been before, and that's kind of an interesting microcosm, where you have people that are on the cutting edge of like cultural development and like artistic expression and creating just a beautiful experience and a beautiful community and just the most like excellent music, excellent art, and just the craziest shit that you can imagine is there in this made up city for a couple weeks. and they, have completely banned any kind of like, they don't want any sort of branding, any kind of money transferring. Everything is voluntary, barter type system, and so it's just interesting that is that's evolved out of it. That to me is indicating of something in our society that's like longing. We need some sort of like different way of doing things, and unfortunately, like, since they're averse to money in general, talking about Bitcoin is a little bit tricky with some of those people, but culturally and uh, like principally and with their values, they would very much, to me, in my mind, align with the Bitcoin ethos.
Very much so.
Yeah.
And I think not having money there, I think it's a gifting economy, if I understand it correctly, where it's
Yeah.
not even barter. It's just like, hey,
Right.
like, I'm giving to the community, and like, here's things that you need. And, I've been asked a lot at Burning Man, but I think people are pretty open to just giving, like, here you go. Like, oh, this is what you'd like. We're giving you gifts. And I think
Yeah.
that really articulates the abundance that we have in the society now, which is great from a technology, and like, we can get these things. But we haven't brought that kind of communal aspect to our own lives, because we're on this in this rat race, on this hamster wheel of fiat currency, kind of
Yeah.
taking money away from you every year. And so if you're making
Yeah.
$100,000 in a salary every year, again, 10% inflation, inherently you're making 10% less each year as well, like,
Yeah.
in real purchasing power. Everything else is going up in price. You're still making $100,000, but that $100,000 buys you 10% less in a
Yeah.
house, in steak, in groceries, in
Yep.
healthcare. And so that's what people are feeling, and they don't even
Yeah.
know they're on this rat race, and they're moving backwards because of the inflation.
Yeah.
They think they got a 5% raise, and they're like, oh, look, my company cares about me. The company probably does care about them, but like, it's not enough to stay up on the rat race. And so that's where you start to come up to these numbers, where that real estate number was really interesting, because you can get, let's say, $100,000 loan or $1 million loan, and you can make more money if that inflation number is 10%. You're paying 10% back less in the loan, and that money is probably going to go to an appreciation of that house by 10% as well. Just kind of using some basic assumptions. And so therefore, you have $1 million house that went up by 10%. You just made $100,000. It makes your
Yeah.
pay raise look like nothing.
Yeah.
Your 5% pay raise for $100,000 is $5,000, versus you just made $100,000 appreciation in your home.
Yeah.
And so now it becomes like, do I even bother working? Like, or like, I'm going to focus more attention on this. And you've seen that in society over time. I mean, everyone wants to flip a house and whatnot. And that wasn't a thing in the 50s and in the 30s on a sound money program. So,
So is
yeah.
there, on that note, like, is there, I know we talked about this briefly, but how do you analyze the risk of contraction type of the of that process, like people borrowing and with low interest rates? If How do you see that potentially stopping and not being feasible anymore? Is that even possible?
I think it just continues, because they have to keep the interest rates low, or things start to blow up, and they can't pay off their own debts, and the governments have a ton of debt, and so they need the interest rates to be low, because if the interest rates jump from 2% to 10%, they have to pay 5x more in their payments. So they're more, imagine your home's mortgage going from 2,000 to 10,000. That's what's going to happen with the government's mortgage or debt. And so you can see that becoming a problem. Like, they just can't afford it. They can't afford it even if it didn't go up by that amount. So I think it just continues until people realize that they can get off and get into a better system. And so I don't know when that would be, because there's no other options for them besides to print that money or to start to default on it, which will really scare people. Once you have $900 trillion dollars in debt, or $350 trillion dollars in bonds, or whatever the number's coming out to, and people start to default on it,
Yeah.
hard default, then you really get scared.
Yeah.
When someone doesn't pay you back the money that they owe you, you get a little more angry than inflation is kind of taking it away, but I'm not really paying attention to that thing, and you'll get the $98 out of the 100 back in 2 years. That sounds fine. But if all of a sudden the guy tells you, screw you, I'm not going to pay you, you get a little bit more angry, and you get burned, and you're going to probably change your behavior.
Right.
Versus just, again, another like $2 out of that $100 as an
Right.
example. So I don't have an answer to that. I mean, you'd think that
So default is basically the alternate path, right? Like, it's either keep creating more debt and papering over the old debt,
right,
and just expanding the monetary supply in that way,
right,
or default and have complete like economic collapse.
yeah, pull the
And-
Band-Aid off, so to speak, really
Right.
quickly. But they wouldn't, of course, they're not going to want to do that. Any rational person would rather just print money, which is a self-default. So they're the only, these fiat currencies are the only systems in place where they can, like, if you had debt on your Monopoly board game, you couldn't print more money to pay off the debt that you had on your house.
Mm-hmm.
The government is the ones that are in charge of the fiat currencies are the only ones that can do that, and so they are doing that. And in a lot of ways, it's a self-default. So if they had $100 trillion in the monetary system and they tripled it to $300 trillion, their debt became worth less in purchasing power, and they now have $200 trillion to pay off the debt that they owed. So it's twofold. That when they print the money, the debt becomes worth less in real purchasing power or value power,
Yeah.
and they have money to pay it off now.
Right.
And so it's a win-win for them, of course. And so any rational person sitting in their seat would take that. If you were in charge of that Monopoly board game, going back
Right.
to that analogy, and you were the banker in that game, and you got to print as much money as you wanted, you would not declare bankruptcy. You would not to have a default. You would just continue to print more money and blame it on supply chain issues.
Right. Right.
And hopefully
Yeah.
everyone pays attention to supply chain issues and anything else that you can keep in the news cycle.
Yeah. Yeah, the only thing that's still kind of like that I'm still kind of trying to work through is, so the dynamic right now is government borrows money from the Federal Reserve, and the banks basically borrow money from the Federal Reserve, or loan it out for them. So my question is, like, is it possible that the Fed decides, or people, the private interests who own and control the Fed, that they decide to basically screw over the government? And like, this is wild. This is just like me thinking out loud and wondering this, if this is even possible. But if they can basically say, no, we're not lending you, you have to default, and they, if their mission is to destroy destroy the economy, so that they can then introduce a new, like, global currency into the mix, that is now that's then going to, like, take over. Does that make sense?
Yeah. I mean,
Is that any part of?
I think
part
they're
of
just,
your
their back is
response?
against the wall, and there's no way that they cannot continue to print the money because
Yeah.
of what's going on. And so, again, you're in charge of the Monopoly board game,
Right.
and of course you'd want people to think of they're on a new digital currency, which we're already on a digital currency. So they try to bring in a new system, but it's just papered over the current system. You know what I mean? It's like, so how's this different? You're going to continue to print money, right? Yeah. How, you're going to inflate the money supply? Yeah. You're going to control people and tell countries that they can't do business with other countries, and you're going to close down bank accounts, for Julian Assange and other people that are, freedom, journalists. Great. Like, why would we that's a problem in the first place. I don't get
Yeah.
it. Like, why would we subscribe to that?
Yeah.
Especially when you have something like Bitcoin that is a fixed supply that you recommend to your grandma and all your friends, and the question is, are you going to use the central bank's digital currency? Or when you go out, are you going to go on to Kraken and trade your U.S. dollars for Chinese digital yuan because it's digital now? So
Yeah.
I don't think so. So I just don't see, like, I think it's just they are in a place where they can't do anything, and they can't taper a Ponzi scheme either. So, in a Ponzi scheme, you're using Peter's investment to pay Paul and make it look like he's getting 10% returns and doing really well, but that only works until it doesn't work, and you can't taper it. You can't go back and say, hey, we want to renegotiate, and we want to do this for you, or give you 50% of your money back.
Right.
Last person in is going to lose all their money, and the first person in is made a ton of money.
Right.
So I just don't think. I think we're just at the end of the Ponzi scheme, and I don't think there's any way for them to taper it. And they're trying everything they can, and it seems inevitable that they won't be able to, especially with a better system. Again, it's like having the captain on the Titanic try to say that everything's fine when you feel the freezing cold water on your legs, and it's like, again, that other boat is there, and people have been partying there for 12 years and trying to bring you over, and every time you call your buddy on the other boat, he's like, the water, it's great, man, we've got a jacuzzi on this boat, and that's what's been happening. And it's like, how long can someone stay on the Titanic? That's a great question. I don't know.
To all my entrepreneur friends, you know who you are. like, the water's great over here. You're spin your wheels. That's kind of what I see a lot is like a lot of my friends are just working so hard, and they're highly productive individuals, really smart guys, and they're just killing it in business, but they have to keep killing it, and they have to like keep growing and keep making it bigger, and taking bigger risks. And what is it for? Like, you're bringing shit like from China and selling it here, and some of it's useful stuff. You're solving people's problems. Totally. I get it, but like, but ultimately, why?
Well, it just becomes less important, because going back to that real estate analogy, where you're like, your 5% increase in your raise with the 10% inflation, and then you have $1 million piece of real estate, which you took a 100% loan out, you bought a house, and it increased by $100,000.
Yeah,
that is 1,000 times more impactful, and it's the same thing with an entrepreneur. Like, an entrepreneur might even be more difficult, because they have to like start a business. It's going to take 5 years. With at least with an employee, you can say like, I'm making $100,000 a year, and then therefore I bought the house, but the house is now making more money than my job, and so that's the kind of thing that is kind of there, like, where an entrepreneur really was making that money before, but now if you read the book When Money Dies about the Weimar Republic, or you just put yourself in Venezuela, where like you're in this Venezuelan type environment where you're trying to create this business, and the real business thing to do, or real business move to make, is just get your fucking money out of Venezuelan Bolivar. And your cash flows, your future cash flows. If you can get your customers to say, hey, we're going to pay you in sound money, whether it's the US dollar, gold, or Bitcoin, you're going to be a lot better off. But you're not going to be better off if you're trying to do a Tim Ferriss productivity hack for the 4-hour work week. That's not going to solve your problem. You have to understand the monetary system, that it is getting worse, that the Titanic is sinking, and you have to then adjust accordingly, and then use your business to help you do that, and still keep your business. So I think that's where you want to be, and the quicker you get in that mindset, the better off you're going to be. Everyone will be.
I know for like just cases where entrepreneurs have shifted into thinking about things in a Bitcoin standard, and it's just like completely changed their perspective, and their business has improved dramatically as a result of that. So it's definitely definitely a great option.
It's a great option, and it does. Once you start to do that, I mean, in El Salvador right now, they have two currencies: the U.S. dollar and Bitcoin, and
Right.
every day they're seeing their cost of goods going up by 10, 20, not every day, but every month they're seeing the cost of their goods measured in dollars going up, and then in Bitcoin it's dropping off a cliff.
Yeah.
And so
Yeah.
once you start to use the unit of account to be a sounder money that's appreciating in value versus losing its value, everything seems to be getting cheaper, and it changes your perspective.
Yeah.
Right? You start to think more long term. I don't need to consume that thing now. I don't need to buy the house now. I'll wait. Hang on to this asset that's growing by 200% a year.
Yeah.
And then you think more long term. You feel more secure. You come home. You're not angsty. You're not yelling at your kids or whatever.
Yeah.
That you can imagine when you don't feel financially secure. It destroys families. It destroys lives,
100%.
and it makes people think short term. So,
Yeah.
yeah.
Yeah, man. Is there anything else that we didn't cover here that you'd like to dive into?
I just think that investment framework is big for everyone to take. The probability times the outcome, potential outcome of $20 million a coin, and what are the risks. And I think the most important thing, the exciting part is the total addressable market of 900 trillion. But the real onion to peel back is how risky is this compared to other assets that I can invest in, right? And when you start to realize that Bitcoin is not only, it's volatile, and it's going to be that way for a long time, but it's not risky, right? That it is perfectly engineered money and it's going to destroy every other fiat currency. Therefore, that's not risky. That also it can't be confiscated from you, that it's a better investment than keeping your money in a bank, that it's safer than keeping your money in a mattress. It's safer than just it's safer than keeping your money in a bank just because the bank can go bankrupt, right?
Yeah.
It's safer than keeping your money in a bank because if you keep your money in the fiat currencies, it's inflating away at a certain percent a year. And so over a long enough timeline, 50 years, you want to donate money to your children or build a school or a nonprofit that's going to last for more than 50 years, you have to pick an asset that can't be inflated away, which means you're looking at bonds, real estate, equity, stocks, gold, and then you're looking at Bitcoin, and you look at all five of those, and you say, okay, which one is the least risky that I can just store my money in over the next 50 years to fund the nonprofit or to give to my great-great-grandchildren. Mm-hmm. And you start to think about that, and you really pull the onion back on each one of those. Bitcoin is 1,000 times safer than any of those.
Yeah.
By a long shot. And with real estate, it can burn down. A tornado, a hurricane, done. It can be taxed out of existence, which we're seeing in California, right? There can be unrealized capital gains tax on real estate. Bonds, those can hyperinflate away just like they did in Venezuela. And then equities are overpriced, and then if the currencies inflate away, that also impacts the equity markets. So, Venezuelan stock market isn't doing too well right now. So once you start to understand that it's the risk-free asset, we're talking about, how do you feel? Do most people feel comfortable having their money in a bank? Yes. Do they feel comfortable having it in fiat currencies? Yes. Therefore, they should feel 1,000 times better keeping it in Bitcoin because it's 1,000 times less risky. And once people make that transition that it's the safest investment that they can have, if it just stayed stable, it'd be an amazing investment and a great use case. But then you throw in the fact that it's going by 200% a year and can potentially continue to increase. So I think the investment framework is big because we need to get people into Bitcoin, and first they need to understand that their money is going to be safe and that it'll probably appreciate. And then once they figure that out, we can teach them about the moral cases for Bitcoin, how it's going to help society, give them the books. But most people aren't even willing to take an investment framework into this, a very simple framework, and allocate 1 to 2 to 3% of their income or net worth into it based on that model. And I think just hammering that home where people can make their own assessment. Is it a 10% probability that Bitcoin reaches $20 million a coin and becomes the global reserve currency? You decide. But again, every time you kind of do that due diligence, you say, well, how will it be stopped? Someone might say the governments will stop it. How will they stop it? Which governments when? Is there indication that governments are stopping it? I see nothing but, an ETF approval and all these other senators trying to bring in, mayors bringing in Bitcoin to their areas. So I think the investment framework and thinking about it as the safest investment that you can have, or analyzing if it's the safest investment that you can have, especially on a 20-year timeline, is the quickest way to orange pill somebody and to get them, off the Titanic and onto the party bus.
Hell yeah.
So I think that's it. Yeah.
Yeah, man. Awesome. Well, this was just an amazing conversation. I'm really glad we sat down to do this. Where can people find more about you, your article, and follow you?
Yeah,
to contact you or anything?
I'll put it on the show notes. I'm on Twitter, and so I'll put that Twitter link in the show notes as well. And so the best way is to DM me on Twitter, and we can have a conversation, and that's the best way to follow me.
Excellent.
Yeah.
Thanks, brother.
Cool, man. Oh, and I just want to say that absolutely love your podcast, because you and John Vallis get the deepest. You get very philosophical, and you get into the moral arguments and the moral reasons for Bitcoin, and I just absolutely love that. So I just wanted to give you a quick shout out to that.
Thanks, man.
It's great.
Yeah, to me, it's just about like following my own interests and following that line of inquiry.
Right.
And I have kind of a religious past in a very deeper philosophical, intellectual journey that I've gone on, and Bitcoin has come alongside of that and just made it exponentially like more interesting. So, to me, this stuff is like fucking fascinating, and I love diving into obviously like building more wealth and abundance for ourselves, but then like transitioning into like what that actually means for our personal development as well, and like because like you said, the like stress and anxiety, just that alone like affects us so much. And I've noticed in a real powerful change where all of a sudden, instead of looking out at the world and seeing all the chaos, seeing the clown shit that's going down, and thinking like, man, like what hope do we have for any kind of like free society?
Right.
Bitcoin, I know it's cheesy, but it like provides that line of hope to think of like, okay, no, there's this thing that they can't fuck with, that no one can fuck with, and we can just build on top of that a new way of interacting together.
And I think hope is it sounds corny, but it's true. And I think that's the craziest part about Bitcoin, is that when you pull up back that onion, it is hope. And you don't hear anyone else talking about their products or their investment ideas as hope.
Right.
No one's like Facebook. It's hope for the future. It's like, no, fuck you. It's
it's the metaverse.
It's the metaverse.
The meta.
It's the worst thing. It's the opposite of hope. And you have strong Bitcoiners that can provide the logical arguments for why it is hope and why it is safety and security for 8 billion people on the planet in the future, where they know that their Indian government is not going to steal their wealth, and in Brazil their currency is not going to be inflated away, or in Venezuela and Zimbabwe and all these other countries. And so for those people it is hope. And like, I don't think anyone that has gone through that understands Bitcoin wouldn't agree with you that it's like they'd be sitting there like 100% it's hope.
Yeah.
No doubt about it. It's hope for my family. It's hope for my friends. I think it's only people in the Western world that don't understand the problem that could even consider it not a hopeful, impactful thing. So I think you're 100% right on that. And we should, it's weird that we even have to be cagey about it. It's kind of hope, but like, unless you don't agree with me, like it's
I like the definition. I heard a old pastor that I used to listen to back in my Christian days, or like hyper Christian days, would say, hope is the urgent expectation of coming good.
Okay.
And I like that definition. It's like you're pretty much expecting coming good to happen, and so you're hopeful.
So he's
Yeah.
going to be. I like the hyper because I'm just like just want to put hyper Bitcoinization
Right.
right in front of it, and it's just like it's going to be real quick.
Yeah.
Past year, buddy. Like
Right.
it's just like I think. I think that's the other thing. To add on and I guess to extend this is just like I think the hyper Bitcoinization. Like how long can people sit on the Titanic? And once you start to see people leaving in
Yeah.
droves and the water coming up, I think that's what we're seeing right now. The Bitcoiners heard the sound and were curious enough to go down to the lower levels to see that it was flooding, and then ran up and told everybody. But once you start to see the water coming onto the ship, which we're starting to see, that's when everyone wants to get off the $9 trillion Monopoly board game and onto the $1 trillion Monopoly board game, where everyone's going to have to be in 20 years or 10 years, whatever the time frame is. That's where you really get to see and you get to comprehend the fact that like it's going to happen fast, and all that money and all those people have to come into 21 million Bitcoin at some point. And so
got a lot of work ahead of us.
yeah. I mean, the business cases are there. It's like there's nothing that's stopping it besides people's education, and then FOMOing in and realizing that the current system is more broken than they thought. So they either, educate themselves and come in, in a cordially way, or they FOMO in when the Titanic is 45 degrees and making weird sounds and sounds like it's going to break in half. So, hopefully we can get everyone in before that. And again, the analogy that I have in my head is like not only you're trying to get mom and pop and the women and children on the safety boat, but then you have these jerks that were in charge of the old system that are going to want to get into the new system as well. As long as we can get everybody a safety boat first, we'll feel pretty good about it. I think that's what most Bitcoiners are trying to do when they get crazy, the dinner table that are going to talk about at Thanksgiving and Christmas, because they want to get you on the right boat, and they know they're on the right boat, and everyone's putting their head in the sand right now. So hopefully they can take it out of the sand at some point. So
I think that's a great note to end things on. Again, thank you guys for listening, and you can reach out, find more about the Bitcoin Path on thebitcoinpath.com, and find me on Twitter at JONCHENOT, John Chanot, and at Bitcoin Path. So with that, may you live a meaningful life and enjoy your freedom as a sovereign individual.
There, guys.
Peace out.
Nice, man. Good stuff. That was fun.